Good morning, everyone, and welcome to the Crypto Minute. Thank you very much for joining. My name is Russell Shaw, Senior Market Specialist at FXCM. My email address is rshaw@fxcm.com. Today is Wednesday, it's the 12th of January 2022. Just going to bring up the high risk investment warning. I'll keep this on screen for a few moments, and then we'll just take a look at some of the cryptos. No worries. Hey, Howard. Okay, got it. Hey, Anna. Good morning to you, and thank you very much for joining. All right. Let's take a look at the market commentaries disclaimer. And just our references, market scope. We may look at TradingView because it's got a bigger history than market scope. But we've got enough history, I think, in market scope to do a decent analysis. So let's bring it. This is Bitcoin. Let me just take this legend out here. All right, let's start with the weekly. Let's see what's going on here. All right, so let's go to this screen. So the last time we did a webinar on crypto, these were the scenarios that we came up with. So again, sort of speculative type of scenarios where we had the this uptrend, reference trough, reference peak. Here's the higher trough, here's the highest peak, and then it pulled back around about 50%. And the scenario that was put forward was if the 50% holds in terms of resistance, well, perhaps we'll get the higher peak, which is this dashed blue scenario here, or perhaps we get lower peak, lower trough, and neither of these scenarios actually panned out because the 50% didn't hold. So let's relook at this. All right, so I think the way to keep an eye on this is now let's put a okay, so we've got this horizontal right at the higher trough. I want to just make this a little bit more visible. Let's make it sort of a big black line. So you can see that we've pulled back all the way to this this higher trough here, which makes it an important point on a technical basis, because if we drop below it, well, we don't have a series of higher troughs anymore. Then we've actually got a lower trough. So if we drop below this, we get what's called an LT. So what's the big deal about that? Is the whole point about trend is the definition in trend. Higher trough followed by higher peak, that's an uptrend. A series of higher troughs followed by higher peaks, that's an uptrend. So if you don't have those higher troughs, well, you don't have the uptrend. So we just want to monitor that this level here holds. But any which way we want to sort of justify this pullback, something that we can say, I think, without fear of fault, is that it's been an absolute brutal pullback. So if you take a look at the actual swing, you know, we've kind of wiped out close to three quarters of this swings basically being wiped out, because we've dropped down to the 74, I think it is 76. I beg your pardon, 76%. So we're about three quarters in terms of actual values. So this is around about 70,000, it's just shy of 70,000, and we're trading at 42,000 now. So my math is so it's close to if somebody had bought over here at 70,000, you know, they've basically almost lost 50% of their, not quite 50%, but pretty much close to 50% of their value. So that's a harding. The idea here is it a good time to perhaps buy the dip in terms of Bitcoin? And I think that is a difficult question to answer for the crypto market as a whole, because there's still debate, there's still a raging debate in terms of what kind of a value does crypto actually offer. Is there an intrinsic value? So if we take a look at gold, which I think is an appropriate instrument to try and compare Bitcoin to, is there an intrinsic value in gold? And I think that we must conclude that there is, and there has been an intrinsic value in gold for throughout the ages, right, going all the way back, say to the pharaohs. I mean, you know, we've had Tutankhamun's tomb, you know, that beautiful gold tomb. Some of the temples were plated in gold. You know, going through to sort of the stories of Blackbeard and all the, you know, gold doubloons and Spanish coin. I mean, gold is a certain romanticism that's associated with gold, and there's certainly a value in terms of its scarcity and what it signifies. I think that I've even seen gold-plated sports cars, you know, being driven around. So the idea, it's a show of wealth, and it's a store of wealth. If people feel that fiat money is losing, its value, well, there could be a whole shift of money, a whole shift of capital out of fiat money, and we'll put it into gold, because gold is a store of value. You know, and currencies were backed with gold, and you know, Fort Knox. There's that famous James Bond Goldfinger, where Goldfinger decides he's going to, you know, steal all the gold in Fort Knox. Yeah. So clearly, you know, in all this sort of myth and fantasy, there is a certain value, I think, that we can conclude must be attached to this, dare I say, a real asset. So the obvious question is, well, does Bitcoin have the same psychology, the same market psychology around it? And I think that's open to debate. Those that love cryptocurrency would say absolutely. Those that despise cryptocurrency would say not a chance. So who's right? And the idea here is, well, I think the way that we must analyze this, because finding out if it has a intrinsic value is going to be difficult because of the debate. It hasn't been proven either way yet. I think we've got to look at it in terms of, well, it's Bitcoin priced in US dollars. That's the way we've got to come to it. Okay, it's Bitcoin priced in US dollars. So what's the what am I actually saying here? So let's go back to the gold example. I think that's the clearest way in my mind to understand it. In that you've got XAU. Okay, XAU. By the way, AU is gold on the periodic table. Okay, so XAU is the ticker for 1 troy ounce. 1 troy ounce of gold, and that's on the numerator side. And then you're going to have the denominator here, US dollar. Similarly, okay, you take a look at Bitcoin, you're going to have this, BTC, okay, is the numerator over US dollar. Now, you will often hear the argument being made that gold is a hedge against inflation. I don't agree with that. I read an article about this a couple of days ago and couldn't disagree more with the author. The idea here is, well, it's gold may respond to inflation, but it responds to inflation in the way the dollar reacts to inflation. It must be that way because this is the ratio. Okay, there could be a demand for a troy ounce. There could be. So in other words, there could be inflationary pressures that increase the demand for the numerator. That's certainly the case. But I think the main mechanism, I think the main adjustment takes place on the denominator side. So we've got a demand supply equation on the numerator, an actual physical demand supply for a troy ounce, and then we've got demand supply dynamics for the US dollar. Okay, so we'll see how these move together. Similarly, well, there must be a demand supply for an individual Bitcoin, and that must be based on some sort of perceived value, just like there would be a demand supply for gold, for the numerator, based on some sort of perceived value. That would be on the Bitcoin as well. But I would suggest a large part of the adjustment takes place on the denominator side. I think a large part of the adjustment takes place on the denominator side. So I think it's very useful to take a look and see what's happening to the US dollar, see what's happening on the US dollar, and then make some sort of inference, okay, make some sort of inference on Bitcoin to US dollar. So I'm just taking a look here. Anna's written something very interesting. There's an MIT course with Gary Gensler called Blockchain and Money for anyone interested. It can easily be found on YouTube and on the web. All issues are addressed. So I don't have a link, but Anna says if you just do a YouTube search, Blockchain and Money, and she says all issues are addressed there. So probably worth taking a look at that. All right, so let's just go back now to, let's see if we can make some sort of inferences here. So I'm going to go now to our, this is trading view, and let's see what we can figure out. Okay, I've just gone to the weekly chart. The weekly chart of Bitcoin. Let's make sure this is logarithmic. It's because we're looking long term. Just make sure your charts are logarithmic. Otherwise, you're going to be fooled by the arithmetic scale. Take a look. There's a difference here. You go through to, this looks vastly different to that. Okay, so just make sure it's on logarithmic. Let's add in the US dollar underneath. Okay, and let's take a look from the COVID pandemic. So we're kind of going this way. Yeah. Okay. All right. So let's start off over here. All right, so this blue rectangle, that's where the COVID crisis hits. It's also marks the beginning of QE. The announcement was made, I think it was made on the 24th of March, subject to correction, which was on Monday, I believe it was that day, that there's going to be unlimited QE. And then, of course, what subsequently happens is the dollar declines, which makes sense, right? QE is effectively printing of money. We may be simplifying it somewhat, but we know that the M2 money supply increases dramatically here. We've made the argument before, if you take, just say, and I know it's a ridiculous example, you take a pink diamond. Pink diamond is incredibly rare, and that in of itself, its scarcity promotes the value of a pink diamond. Now, if the market was just flooded with pink diamonds, well, that's going to devalue pink diamond. Same thing with dollars, right? The more dollars that get flooded into the market, well, the less the dollar's worth, and that's what we see here. Okay, so we see the dollar capitulating. You holding dollars, and you know that there is unlimited quantitative easing. Okay, you want to protect your wealth. You start shifting it into other instruments. One of these instruments seems to have been Bitcoin. Okay, so there was some sort of reallocation here into other assets, real assets, and the decline in the dollar pushes up Bitcoin. Now, where's the adjustment being made? On the numerator side or the denominator side? Okay, it's probably a little bit of both, but I think we can safely say that a large part of this adjustment must have been made on the denominator side. It must have been. Okay, how would Bitcoin have adjusted? Well, you know, potentially the blockchain technology, the speeds are improving. I think Ethereum too had a large part to play here. But the point is, the adjustment here seems to be majority denominator. Now, what happens is that dollar hits a low around about here. Okay, guess what? Bitcoin hits a high. All right, surprise, surprise. Now, where it gets tricky is that over here we see the there we go. This is where it gets tricky. Here we see the US dollar has appreciated markedly. Okay, if the adjustment was purely being made on the denominator side, we should get something like this. We should get something roughly like that. We don't actually have that. We have a decline, but it's a lot a lot more shallow than the US dollar. In other words, there has to be some sort of influence now being made from the numerator side. So the question is, does Bitcoin have some sort of intrinsic value? Well, the answer to that, the answer to that must be yes. Okay? It must be, because if it had no intrinsic value and it was only being driven by the denominator, this gradient's not steep enough. Okay? It's not steep enough. So yes, there does seem to be some sort of adjustment taking place on the numerator side. There must be. But the predominant influence is still on the denominator side. So we're getting adjustment on the denominator, but it's been countered to some degree by adjustment of intrinsic value on Bitcoin. The question now is, well, just how valuable is the intrinsic value of Bitcoin? And again, I don't think that has been determined. So I haven't listened to Gary Gensler, and I intend to, but I know what Warren Buffett has said about Bitcoin. I know what Nouriel Roubini has said about Bitcoin. Those are giants, okay, in the world of finance. So the idea here is the jury's out, okay? There must be some sort of there is some sort of value to Bitcoin. It cannot be denied, because the gradient's too shallow on Bitcoin USD, okay? But it's not enough to counteract what's happening on the numerator side. So now, if that is the case, well, and if the sensitivity is more intense on the dollar side than on the Bitcoin side, well, then what's happening to the US dollar? That's got to be a key issue. It must be a key issue if that's where the sensitivity lies, okay? So I think that the hawkish nature of the central bank, the hawkish nature of the Fed, is going to play a role in Bitcoin's trajectory. So the question is, well, how much of the Fed's hawkishness has been priced in, has already been discounted in the current US dollar price? And it's true that there could be a large part of the hawkishness already being priced in, but I'm not of the opinion that it's completely priced in. Demand-supply dynamics haven't really started to adjust yet. As soon as the balance sheet starts being reduced, as soon as that happens, okay, that has to affect the supply side of your market forces for the dollar. Has to. Okay? It cannot not affect it. It has to. So think about it in terms of pink diamonds. Okay, I know using extreme examples is probably a poor way to go about it, but if you've got a market that has got a huge influx of pink diamonds, all of a sudden those pink diamonds get siphoned out of the market. Well, whoever's left with a pink diamond, which is incredibly scarce, becomes a lot more valuable. Same thing with the dollar. So we've got over 8 trillion, close to $9 trillion sitting on the Fed balance sheet. Okay, that's going to start being normalized. Now, I don't know where the equilibrium point is. I highly doubt they can send 9 trillion, sort of between $8 and $9 trillion back into the market without severely disrupting the market. So it's going to be managed, and there might be a level. They might say, okay, look, we can, let's get it down from sort of 8.7, I think is where it's at now. Let's get it from 8.7 down to 5. Okay, let's do that and see how the market reacts, and then we'll let it stabilize at 5. Maybe we'll have to do more. Maybe we can just leave it. I'm not sure how they're going to do it, but that's 3 trillion then, just boom, softened out of the market. Okay, well, what's that going to do to the denominator on Bitcoin USD? By the way, what's that going to do to the denominator on XAU USD? Right. So the anything that's priced in dollars, it's going to have some sort of effect. So the idea here is, okay, does Bitcoin have an intrinsic value? It must. It must, because the gradient here suggests as much, okay? But it certainly doesn't have the influence at the moment that its denominator has. There may be a time when blockchain technology really kind of reaches that sort of a threshold level, and all of a sudden the intrinsic value becomes blatantly apparent, and then the numerator perhaps outstrips the denominator. We're not there yet. Clearly, we're not there yet. So the idea, okay, the idea here is we're going to have to watch how the market reacts to US dollar. We're going to have to see how the instruments priced in US dollar react to that, and then get some sort of make some sort of inference off of that. Let's just take a look at crypto major, just as the last instrument, which would be the index, the FXCM index. Let's just take a look, see what's happening here. All right, so you know what? Let's do it. Let's do it here. All right. It's odd. It does seem to be some sort of adjustment here. All right. I'll have to look into that. Similar analysis. So this is not just looking at Bitcoin. I think we've got 5 different cryptos in here. Something odds looking, something odds here on the chart. I'll just have to speak with our data guys. And so Bitcoin looks like it's got the relative strength, doesn't it? Bitcoin looks like it's got the relative strength. It's perhaps not doing the crypto major justice. I don't think that this analysis is valid until I figure out what's going on with this decline here. But okay, it's probably more accurate, so sort of sideways. So maybe this does suggest an intrinsic value on the numerator side for the others. Okay, I'm not certain about that. Ethereum definitely. Bitcoin, potentially, Dogecoin, I don't know so much. So let's just keep an eye on these. We're going to carry on with these crypto minutes every Wednesday. Are there any questions at this stage? Go ahead and type those through. All right, nothing here. I'll take a look at that series. Anna, thanks very much for that. I'm going to wrap up here. I'm going to upload this to Insights. I'll put it on our Telegram channel as well. Thanks very much, guys.